Every American homeowner should have their own personal Bitcoin treasury. Let's start with some math. Take the average US home worth about $500,000 today. Now imagine you carve out just 10% of that value, $50,000, and swap it into Bitcoin. Run the clock forward 21 years. If your home grows at 3% annually, a historically fair assumption, it ends up worth about $900,000. That's the baseline. Your home plus nothing else leaves you under $1 million in total wealth. But now add in that 10% Bitcoin allocation. At a 21% annual compounded growth rate, the level many analysts consider conservative for Bitcoin over the long run, you're not sitting on $900,000. Instead, your combined home plus Bitcoin portfolio is worth $3.1 million. That's the difference between a decent retirement and true generational wealth. And that's just the baseline scenario. Here's the thing. Bitcoin has never had a multi-year annual growth rate lower than 26%. Its average across its 14-year existence with a price is closer to 74%. So what happens if you assume 26% instead of 21%? That same $50,000 allocation explodes into $5.1 million over 21 years. And if Bitcoin compounds at 30%, which is still well below its lifetime average, you're looking at $10.3 million, all from a simple choice: taking 10% of your home's value and directing it into Bitcoin. Now put this in context. The Case-Shiller Home Price Index, the benchmark for US housing, has fallen below 2% annual growth. Home prices have stalled. Housing, once the cornerstone of the American dream, is stagnating. Your home is still valuable. It provides stability, a place to live, and a long-term base of wealth. But as a pure financial instrument, it's closer to a bond now than it is to equity. Low yield, slow moving, and reliable, but hardly transformative. Bitcoin is the opposite. It absorbs demand without limit because of its absolute scarcity and dollar debasement. Every 4 years, the issuance rate is cut in half while adoption grows exponentially. It's the purest compounding machine ever discovered in finance. And the timing couldn't be clearer. The US is running over $2 trillion worth of annual deficits. Inflation remains relatively sticky. Real yields are barely positive. Housing is flatlining, and traditional savings vehicles are getting eaten alive. Against that backdrop, a personal Bitcoin treasury changes the game. It's not about going all in or betting the house. It's about carving out a conservative slice of value, just 10%, and letting it compound for decades. Think about it this way. Path 1, you hold only your home, worth less than $1 million in 21 years at the current growth rate. In Path 2, you hold your home and a Bitcoin treasury worth $3 to $10 million in 21 years, depending on Bitcoin's growth. The first is the old American dream. The second is the new one. And corporations already understand this. Strategy, the world's largest corporate holder of Bitcoin, has converted its balance sheet into a Bitcoin treasury, and they're sitting on over 600,000 BTC today. Because they see the math. They see what happens when you replace stagnant assets with Bitcoin. Housing can play the same game, and the numbers don't lie. In the 21st century, the American dream isn't just about owning a home, it's about owning a home alongside a Bitcoin treasury. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure to like and reshare so more people can see this. And of course, check out Horizon. Horizon lets you stack Bitcoin using your home equity without new debt, monthly payments, interest charges, or term limits. You can check that out at joinhorizon.com or by scanning the QR code right there. That's all for today's video. Thanks again for watching. I'll talk to you soon.